Okay, so yesterday I shared what I believe was an A+ setup. It eventually went on to fail. It started off going in profits, but then it eventually went on to fail. And then after reviewing it, I realized that I missed one piece of critical information that could have been highly profitable. But I'm glad I did it in the demo account because it taught me a valuable lesson. And I stayed in the trade for about a little bit over a day. And that taught me a valuable lesson as well. Sometimes it's not about the quick swings. It took a while before it actually took my stop loss. But the fact of the matter is, sometimes you getting in a trade and sitting in that trade could position you for profits longer term, and you ride a trend longer than just getting in and getting out. So I like that aspect of it. Even though this was a losing trade, let me show you what it is that I missed, and you see how much was lost from the trade. Let's go. So the trade that I took was in the gold ticker, 1 ounce gold, and it was on the 14th, Tuesday the 14th, and it was around this time, shortly after this big large bar. So we can almost consider this a fake out. You know, like I got faked out. I got tricked. Let me be the first to tell you I got faked out. Now, I did see some metrics on a smaller time frame, which meant that the trade could have been profitable had I taken profits out earlier. But, you know, of course, everybody says that. However, what I do want to point out is what I missed about the system, and comparing the multiple time frames is something that is so blatant right now that I'm glad it happened in a demo account. And of course, I can't predict what is likely to happen, but I said in the video that gold has been trending downward for the past several months, like since February. That said, you could position yourself in many cases, not every time, for some downward momentum. Can you catch some ups? Absolutely. Can you make money when it goes up? Absolutely, because sometimes it's going to retest certain areas. But that's not what I did. I placed a buy sell at a time where overall the trend was bearish, but I still took a buy sell. But instead of me looking at it as a quick scalp, a way to get in and get out, as I should have done that trade, where I made the mistake is that when I got in around this bar, I just rolled it out and just stayed in because I was confident in either it hitting my take profit or it hitting my stop loss. I was just like, hey, let me just sit on my hands, or let's just walk away, and whatever happens, happens. And I'm okay with being that type of trader if I trust whatever it is that I looked at, and then later I decide if that was a good move, why or why not. In this case, it was not. But when I went to look back and compare other time frames, I was like, oh, okay, I get it. Because we could see right here, it's a clear downtrend happening. You know, if you just look at where the market started on this side of the screen and now it's down here, that lets you know it's a clear downward trend. And then of course, as I'm understanding market structure, I'm starting to see, okay, I see lower lows being created in certain areas. Lower low, lower low. Okay, we're going back to test this, but it's still a lower high. Okay, boom, a lower low. Well, not quite a lower low, but it's going in the downward direction and starting to go up, which created a lower high. Still says that we're in a downtrend, but then we go down to another equal low, and then boom, it comes back down to this box to create another equal low to the previous low. So it's really still following the same downward trend market structure. I'm a newbie in that area, but I like that explanation so I can better understand what the market is doing and how to get in and get out. Now, this is the 1 hour time frame, but where the mistake was obvious to me in hindsight is on the larger time frame. Let's go to the 4 hour time frame for starters. And the 4 hour time frame is nothing different. It's showing downward momentum. Gold has been bearish, like I said, for the past several months. So if you look at where the chart started out and then you see it down here, it's still in a downward direction. Downward direction. But there was some upside here that could have, been some profitable times. Or if you were in a sell here thinking it was going to stay going down, you could have been losing money over the course of these days, all the way from June. But then after, towards the beginning of July, give or take, it started back overall going down. So these are some things to look at just from a market structure. despite looking at the A plus setup that I like to look at, which I'm seeing some A plus opportunity right here, but that's not what this video is about. I want to show you how I was wrong, call it out, and then let you know what I learned from it. Like, what was the ultimate takeaway from being wrong in this trade? Because when I'm looking for an A plus setup, I'm looking for the daily buys to match whatever the signal is that's given, so bearish should match sell signal. Then you want some green momentum letting you know money is in the market, and then ultimately you want to be able to see that the market is trending in that direction. Right now, I'm not showing those bars like that on the 4-hour, but if I switch to a smaller time frame, maybe so. So I go back and look at it and see what I see. But this is where the egg was in my face. This is where I realized, oh, this was kind of blatant. You just kind of chose to overlook it, so to speak. If I knew I was going to hold the trade for a decent amount of time, when I switched to the daily, which I did in the video, I saw that the daily was overall bearish. I said that this was more of a get in and out kind of trade, but I did not get in and get out. So I said it verbally, but I still just trusted whatever my take profit was because I felt it could have the potential to hit my take profit, but instead it kept going down and went to my stop loss. But this is where I said it was more so obvious. This big red banner. Now, not every time when that shows up is going to be automatic, sell or automatic going down or going up if it said A plus buy. However, if it says sell like this on the daily, then it's a good chance that over the next couple of days you're gonna see some lower lows. It's just a good chance, not guaranteed, but just a good chance that you're gonna see some lower lows. And that's exactly what was happening after this A plus sell presented itself. So you see it going down all the way. Like I said, it's been going downward since February. This is the daily, and ever since February it started peaking, and boom, big bar drop on that day, and then so on and so forth. But it's still going in a downward direction. Big opportunity to catch some downward flow and some opportunity. And the longer you can stay in the trade, the better you can position yourself to be profitable, as long as you can withstand the ups and downs that the market will present in front of you. But this big red A plus sell on the daily is where I should have been thinking, knowing that I was going to be willing to keep the trade open a little longer. If I just wanted to do a quick scalp, then I should have been eyes on the screen, looking, paying attention, or doing like I did and saying, okay, I'm cool with whatever take profit comes from it or stop loss. So I'm still not mad at that angle, because once you pick a decision or once you decide, you just stick with your decision, come back and see how it played out, and then learn from whatever that decision was. So I'm not mad at how I did it, but it was some more obvious signs that could have gave me some opportunities to make money in the fact that it's been trending downward for months. So that's my L. I own it. I stick to it. That being said, let's look and see what the 2-minute chart is showing, and then we'll wrap this up. So as you can see, when you switch from the daily to the 2-minute, it almost look like the 2-minute is specs. And that's why you got to realize when people say, oh, the market is crashing, you got to zoom out sometimes. You got to see how far it has come versus where it's going now in the small time frame. This is the 2-minute chart, and for the past several minutes, it's been going downward. So there have been some opportunities here. I've seen some potential A plus setups that presented themselves. Right now it's showing a buy signal, but that buy signal does not match the daily buys, meaning that this might not be A plus, or this is not an A plus setup. Could somebody get in and get out? Yes, possibly. However, you just want to choose what works best for you, because it's a good chance it could go up to retest this box right here, because there's not a lot blocking, or it could even go and test this box right here because there's not a lot blocking it. But a person would just have to know what they're into, knowing that, okay, I'm just getting in to get out, getting in to get out, a little money in the market. So that would just have to be the decision or the choice that they make. I'm not about to place a trade right now, but it could be some opportunity. But ultimately, the market has been trending downward, and as a result of that, people who I've seen making money in gold have been making more money on sales as the market goes down. If you want access to the tool that allows you to spot A plus systems, A plus setups, including but not limited to the one that I overlooked, then there's a link down below. That's all I got for this video. Mr. Smith signing out. Salute.